Hello, I'm Martin Smith and this is your UFX Markets Week in Review. Today we'll cover some of the major events of the past week and discuss how they impact the global currency markets. The US dollar strengthened against the Japanese yen as higher than forecast non-farm payrolls data emerged from the USA, decreasing speculation about a Fed monetary stimulus. The US non-farm payrolls increased by 227,000 in February after rising by a revised 284,000 the previous month, Labour Department's figures showed. The US dollar was last trading against the Japanese yen at a rate of 82.43, an increase of 1.10%. The euro declined for a second week against the dollar after Greece held investors to taking losses on holdings of the nation's bonds, decreasing demand for assets linked to growth in the EU. The euro fell after Greece invoked collective actions clauses to promote investor cooperation in its government bond swap to forgive more than 100 billion euros of debt, paving the way for a second bailout. The euro was last trading at the level of 131.22, a decrease of 1.14%. The British pound had its biggest weekly decline against the US dollar since November as a report emerged showing that US employers added more jobs than forecast last month. The Bank of England maintained its quantitative easing programme with a pledge to purchase £50 billion of bonds by May, and it kept its benchmark interest rate at 0.5%. The pound was last seen trading at 156.68, a decrease of 1.02%. The Canadian dollar strengthened after the central bank said conditions in the domestic economy and the European debt markets are improving, and after the US added more jobs than forecast last month. The Canadian dollar was last trading at 99.02, an increase of 0.03%. Commodities now. Oil rose after the improved non-farm payrolls report came out, increasing optimism that the world's largest economy and fuel demand will grow. Crude oil was last trading at $107.40 a barrel, an increase of 0.77%. Demand for gold is rising as European leaders attempt to contain the region's debt crisis, and governments from the USA and the United Kingdom try to maintain interest rates at all-time lows to stimulate growth. The Fed and the Bank of England have purchased debt, and the European Central Bank has extended unlimited three-year loans to the region's lenders, which is driving investors to purchase gold as protection against inflation. Gold was last trading at 1713.37 per ounce, an increase of 0.81%. Well, that's all we have time for today. I hope you've enjoyed this week's review and you'll join us next week. Until then, be sure to visit us at ufxmarkets.com for all of your online trading needs. For UFX Markets, I'm Martin Smith. Good luck and happy trading.